Herzlich willkommen zu unserem Webinar Compliance im IFI Geschäft am Beispiel der Weltbank. Ich darf Sie herzlich begrüßen. Mein Name ist Theresa Weiß. Ich bin hier am Außenwirtschaftscenter Washington für alle Fragen zum IFI-finanzierten Geschäft zuständig, wie zum Beispiel für die Weltbank und die Inter-American Development Bank. Sanktionen und Compliance ist ein Thema, das wir hier normalerweise im Rahmen der US-Handels- und Wirtschaftspolitik betreuen. Sie sehen hier auf der Folie alle Aufgabenbereiche des Außenwirtschaftscenter Washington. Aber Korruption, Sanktionen und Compliance sind natürlich ein ganz wichtiges Thema im IFI-finanzierten Projektgeschäft in Entwicklungs- und Schwellenländern. Wir haben eine kleine Änderung heute. Es ist anstatt von Paul Haynes, den wir angekündigt haben, darf ich heute Magdalena Sold, Senior Investigator, begrüßen bei uns, sowie Lisa Miller, Integrity Compliance Officer von der Weltbank. Wir werden jetzt in englischer Sprache fortsetzen. Zuerst die Präsentation von Magdalena Zold und dann in Folge die Präsentation von Lisa Miller. Magdalena.
Thank you. Hello, good afternoon, everybody. My name is Magdalena Sold. I work at the World Bank's Integrity Vice Presidency, and I'll introduce the investigations and sanctions function that the World Bank has, and then my colleague Lisa will take it from there and explain about the compliance function. So this is just to give you a roadmap of the presentation. We'll start with some background about the Integrity Vice Presidency and what we do at the bank. Then we'll talk about investigations, sanctions, and referrals. So you probably are familiar with the World Bank. It's an international organization. It has two ambitious goals that are to end extreme poverty within a generation and to boost shared prosperity. It's comprised of about 189 member countries, and we have staff all over the world. What does the World Bank do? It provides low-interest loans and credits and grants to countries for economic development projects. So how do we as Integrity Vice Presidency fit here? It's the World Bank has a fiduciary duty towards all its member countries, and it's to ensure that the funds are used for their intended purpose with attention to considerations of economy and efficiency. The World Bank has conducted several studies and has realized that corruption can seriously reduce the investments, and it's one of the biggest impediments to economic growth. For this reason, the bank has many projects on anti-corruption and works with client countries. But aside from that, it has the Integrity Vice Presidency. And our role is to make sure that the funds that the World Bank finances are used for their intended purpose and that there's no abuse in the use of those funds. So the Integrity Vice Presidency was created in 2001. Before then, the bank didn't really have the structure to deal with allegations of fraud and corruption in the different projects that it financed around the world. We're about 80 professional staff with diverse backgrounds. We're based in Washington, D.C. Our mandate is to conduct administrative inquiries to investigate allegations of fraud and corruption involving World Bank staff and World Bank supported activities. And we also have a preventative function. These are our colleagues who try to extract lessons learned from our investigations and streamline them into the design and the implementation of our projects to prevent certain, let's say, misconduct from reoccurring. And we also have the compliance function that Lisa will talk about. So jumping into investigations, I'll explain what the sanctional practices are, which is what are the different misconduct that we do investigate, how we conduct these investigations, what the framework is in which we usually conduct these investigations, and I'll explain a little bit about what our main tools are for conducting these investigations. Then we'll go into sanctions and referrals. So we have 5 sanctional practices. These are the only sanctional practices that we can investigate. They have been adopted by the World Bank through its guidelines on anti-corruption or to prevent fraud and corruption in World Bank finance projects. They're included into the World Bank procurement framework, the different, let's say, regulations that apply to purchase goods and services in projects that are financed by the World Bank. And they're also included in the standard contracts that are used in World Bank finance projects. So if you are a company that participates in a tender related to a World Bank finance activity, you will have likely already seen these definitions in the contracts and the tender documents that you may have come across. So what do we investigate? The 5 sanctional practices basically consist of fraud. You have the definition here. It mainly involves a misrepresentation that needs to be intentional or reckless, and that is directed towards obtaining a benefit. The fraud can basically occur in the context of a tender, but it can also occur in the context of contract execution. We investigate corruption. Again, the definition is here. It basically involves a quid pro quo to improperly influence actions of a party. It can also occur in the context of a tender or in the context of contract execution. We investigate collusion, which captures, our definition of collusion basically captures 2 different scenarios. It captures the scenario of cartelization that might influence prices and set them at artificial levels, influencing a tender. But it also captures improper arrangements between parties in the context of a tender, which could include a bidder and perhaps an official who is involved in the tender process or the bid at issue. Fraud, corruption, and collusion are the 3 sanctional practices that we mostly come across in our investigations. But we also have 2 more. Coercion, which we have seen, let's say, to a lesser extent, and it includes harming, threatening, or impairing a party, again, in the context of a procurement process or the execution of a contract. And again, it has to have a purpose to influence that specific tender or the execution of a contract, the actions of that party in that context. And finally, obstruction, which appears in different forms, but it basically captures the impediment of the World Bank's audit and inspection rights that I'll be explaining in the next slide, or an investigation by our Integrity Vice Presidency. It's important to take into account that the World Bank has jurisdiction mainly to investigate companies, NGOs, and individuals that bid for World Bank finance contracts or that execute contracts in the context of a World Bank finance activity. The World Bank is an international organization comprised by member states. And when we do come across misconduct involving government officials in the context of these investigations, we do have, let's say, we have a specific way to deal with it, which means that we'll at some point notify a member state, but we do not have jurisdiction to sanction government officials. So most of what you'll see about our work, our investigation, and the final potential sanction system will be focused on the acts of companies, NGOs, and individuals. Again, it's not that we don't do anything about government officials, but it's a different action. Also, this slide that may seem a little bit complicated to understand at first sight basically lays out the context in which we conduct our investigations. You'll see the World Bank, which will have a financing agreement with a client or borrowing country. And that financial agreement will include the World Bank anti-corruption guidelines. It will set out which procurement rules need to be used to award contracts that will be financed under that financing agreement. And that's the relationship that the bank has with the client, with the country. That country will need to designate an entity that will be responsible for executing the loan, basically the financing agreement in a sense. And it will usually be a line ministry or will be an entity, an agency within their governmental structure. That ministry at the same time may have a dedicated unit, which we call project implementation unit in this slide. And to that end, there will be some kind of project agreement and manual setting out all of the rules and the directions that they need to follow in using the World Bank finance funds. And it's that specific entity which will then handle the bidding processes or the procurement processes, the different tenders that will then award contracts. And the contracts will be signed between that entity representing the borrowing country and the different contractors, consultants. The World Bank is not a party to that contract, as you can see here, but those contracts do include certain stipulations based on which we can conduct our investigations. Those stipulations, on the one hand, will give notice about which sanctionable practices apply, so that there's clear notification about the conducts that are not allowed under our projects. And they will also contain what we call the audit and inspection clause. It is a clause that indicates that the World Bank has audit rights to inspect the companies or the contractors' accounting records, and as well as other records, which may include correspondence or other implementation records related to a contract execution, but also related to the preparation of a bid or a proposal for a procurement process. So how do we conduct our investigations? What are, let's say, the tools of our trade? As I just mentioned, we rely on the audit and inspection clause to conduct audits and inspections. We sometimes rely on confidential witnesses. We cannot grant confidentiality to anyone lightly. We need to conduct a rigorous assessment. We do have certain bases on which we can grant confidentiality, and at the same time, when we do that, that may have implications in the context of the sanctions process. So we're very careful. The evidence that we obtain through confidential witness does not have the same weight as evidence that we obtain through other witnesses, and we're mindful of that. But we're also mindful of the need to protect sources and to our need to access information. So depending on the context and the risk that certain sources might be facing, we may grant confidentiality. And finally, we'll talk about it in a little while. We may reach settlements or negotiated resolutions with companies that may admit to misconduct. And in that context, we'll also commit to cooperate with us, and that might also be a source of information. We will rely on the information that we obtain through companies to conduct our investigations. You can also see some pictures there. These are pictures from actual investigations, and get a sense of the volume of documents that we usually review when we conduct an investigation. We conduct site visits. We sometimes need to, for instance, for a fraud case, we may need to corroborate whether a contractor has followed technical specifications, and you'll see a colleague measuring a road here. We rely, for instance, on satellite pictures, and this one in particular showed an empty property where a school was supposed to have been built and had been paid for, or the final picture to your right. This is equipment that was delivered under a health project. So we also travel to countries to conduct our investigations. We check on what was delivered, what was built. We interview parties that were involved in the procurement process or contract execution at issue. That's what we do. There's no much more mystery to it. Let's say, so now let me get into sanctions. Once we've concluded an investigation, we may conclude that there's sufficient evidence to establish that misconduct occurred, that a sanctionable practice did occur. And in that case, we may take the matter towards the sanctions. And there's different ways in which we can reach sanctions, and that's what we'll discuss from now on. So our sanctions are administrative remedies. They are not criminal penalties at all. Because it's an administrative decision, it's also based on a standard of evidence that basically requires the preponderance of the evidence. It is more likely than not that the misconduct occurred, and that's the standard to which that we need to prove to take our case forward. There's 5 different types of sanctions that companies, NGOs, or individuals may receive. They go from a letter of reprimand, and it's a public letter of reprimand, to they go through debarment, which basically involves a declaration of ineligibility to receive contracts in World Bank finance activities for a determined period of time. We have conditional non-debarment, which basically it's a sanction by which a company will continue to be eligible to receive contracts in World Bank finance activities as long as it complies with certain conditions. And they might include, for instance, compliance conditions that Lisa will discuss in a little while. And then we have debarment with conditional release. That is the mostly used sanction. It involves a period of debarment. And again, the company will be released from the debarment if it complies with a series of conditions that, again, include not only cooperation, but also compliance. And finally, restitution. It's a sanction that we use, not as widely as we use the rest of them. There are certain debates about the extent to which it should be applied or not. At this point, and for now, we only apply it in the case of entities or companies, individuals, NGOs who have actually been awarded a contract and received the benefit of a contract. And there's also debate about how to calculate that restitution. So we try to be as objective as possible, applied in cases of fraud where we can identify the amounts that were defrauded or that were somehow related to the misrepresentation and cases of corruption. So as explained, debarments exclude companies and individuals from being awarded World Bank finance contracts and participating in World Bank group finance projects. And it's important also to note that the ineligibility also extends to affiliates, which means entities that are directly or indirectly controlled by the debarred company. And in this case, we'll talk about settlements just in a few minutes. It's important to remember that when we negotiate, when we have settlements, we may have some flexibility to look into which of the affiliates would really be involved in World Bank finance projects or what their line of business is to determine which will be covered or not by the agreement. And finally, I did say before, our sanctions do not apply to public officials. In those cases, when we do obtain findings, when we have evidence indicating that public officials from a borrowing country were involved in a sanctional practice, we'll do a referral to national authorities for them to, we just notify them about our findings, and they make their sovereign decision as to how to deal with it. So this slide basically presents the two ways, let's say, in which an allegation of misconduct might be resolved, and perhaps to be more specific, two ways in which a matter could be resolved when we actually have evidence of misconduct, when we've already concluded that there's sufficient evidence to establish that misconduct occurred. On the one hand, there's a sanctions process, which is handled by independent units at the World Bank. They are absolutely independent from our vice presidency. Sometimes we agree with their decisions, sometimes we don't. We'll put our case forward. They'll listen to both parties, to all of the arguments, analyze the evidence, and reach a decision. And they have the authority to sanction companies, NGOs, or individuals for their conduct when they do agree with the fact that misconduct occurred. And then there's a different route that is the settlement route, let's say, the option of negotiating an agreement with our vice presidency. And this slide presents let's say, the difference between both processes. So both processes are confidential. The settlement negotiations are similarly confidential, and so are the exchanges of pleadings that occur in the sanctions system. For the sanctions route, let's say the litigation route, there's basically two tiers or two phases through which the case is decided. The first one is the Office of Suspension and Debarment. They will receive our pleading, they will receive our accusation, they will analyze the evidence and come to a conclusion as to whether our claims are supported by the evidence. If they do believe that that is the case, they will then issue an uncontested, they will issue a notice that goes to companies. Companies will have ample opportunity to defend themselves, and eventually will issue a judgment and recommend a sanction. There's a possibility to appeal that sanction or request a review by the Sanctions Board of the World Bank, which also holds hearings to receive the evidence and to analyze it. And obviously, this whole two-tier process is an adversarial process, which might take longer than a negotiation with INT, with us, with Integrity Vice Presidency. We'll see later that the decisions by the sanction system are published and are public. And the settlement option, let's say, which involves negotiating with our unit, involves informal negotiations. The information that is exchanged in the context of the negotiations is only exchanged for settlement purposes only, and it's confidential too. It's available to every subject, and the beginning of this settlement process usually starts with a show cause letter that will detail the evidence of the case that is sent by our unit, by our vice presidency, to the different companies. One of the main requirements for settlements is for the entities to agree to voluntary restraint from bidding in World Bank finance projects while we're negotiating. We believe that's a very important token of good faith that helps advance the negotiations swiftly. It's based on a cooperative approach, let's say, and it's usually quicker than the litigation route, tends to be more efficient. We give great weight to cooperation, and usually will lead to, let's say, lighter sanctions or more mitigation in agreeing on the sanction to be imposed. You'll see here the conditions for settlement or agreements. It requires a willingness to accept the culpability. Doesn't need to be a specific admission. We have some language that also accommodates a decision not to contest our findings. There needs to be agreement to a sanction that will be negotiated. It continues to apply to subsidiaries and affiliates, but as I said, there's more room for negotiation than what there usually is at the sanction system. It requires full disclosure of misconduct, an agreement to cooperate with us, not only on the specific matter that led to the negotiation, but also in broader matters, if we do have some requests for cooperation during the time when the agreement is in effect. The purpose is corrective and remedial. We certainly want to prevent reoccurrence of misconduct, and this is where Lisa's function also steps in. It will require implementation of a compliance program, or if the company already has a compliance program in place, an enhancement of that compliance program that is satisfactory to the basic principles that the Integrity Compliance Office has, and Lisa will certainly develop all of those. And as I mentioned, it does require voluntary restraint during the negotiation. Sanctions are public. They are published in a web page that the World Bank administers. It will contain information about, it will contain the name of the company or individual that has been sanctioned. It will mention its address. It will include the country of origin, the period of debarment, and in some cases, we also have cross-debarment. I'll explain what this is in just a minute. When we do have a sanction that is published in our web page that is based on cross-debarment, on recognition of a debarment that was issued by another multilateral institution, will also say so in the publication. Sanctions are also published. Both tiers in the sanction system publish their decisions, as you can see here. And finally, cross-debarment. What is cross-debarment? This is an agreement that was reached by 5 multilateral entities: the African Development Bank, the Asian Development Bank, the European Bank for Reconstruction and Development, the Inter-American Development Bank, and the World Bank. This agreement provides the basis on which we mutually recognize sanctions issued by other entities when the sanction involves a period of ineligibility that is more than 1 year and 1 day. And the cross-debarment takes effect when the sanction is from after the sanction takes effect, basically, and we communicate each other about our decisions. And you may also want to know that some UN agencies, and in some cases, sometimes even some private institutions, unilaterally decide to informally follow our cross-debarment list. This is something that we cannot control and that we're not notified about, but we have already heard about this in several instances. So the fact that that information is published and is public may also lead to that. And my final slide before Lisa starts with compliance is on referrals. As I explained before, the purpose of our referrals to member governments and national authorities is to notify them about our findings, about what we found. We believe that we have a duty to do that, being an organization that is comprised by member governments. We usually share very concise reports that don't really elaborate that much about our findings through strictly confidential letters that go to the Ministry of Finance in the different countries, basically the member country where the misconduct occurred. In some cases where we work well with local law enforcement, we may also share with them. This is a very tricky and complex matter because the World Bank, being an institutional organization, has privileges and immunities that we need to protect. The World Bank's legal department is very zealous about protecting those, and that has an impact on the amount of information that we can share and the nature of the information that we can share. But we still make sure that there's sufficient information in those referrals so that member countries can certainly initiate their own investigations if they choose to do that. And it's explained that we notify, the purpose is to notify the government and also to assist them when we can in their own investigations, be them administrative or of a different kind. So there are some resource links here in this slide that will that help you. There's the link to the list of ineligible firms. There's information about our integrity compliance that Lisa will discuss right now, and there's information on the sanctions system. Thank you very much, and I look forward to receiving your questions afterwards. Now I'll hand it to my colleague Lisa Miller, who will explain the work of the Integrity Compliance Office.
Thank you, Magda, and thank you all for joining this webinar. So as Magda had mentioned, the default sanction at the World Bank Group is now debarment with conditional release. So what that means is a company will not be released from debarment, will not again become eligible to bid under or to participate under World Bank Group finance projects unless they have met certain conditions for release. Previously, the more common debarment had been just a flat period of ineligibility. So say a company was debarred for 3 years, they would sit out those 3 years and automatically come back in eligible to bid and participate under World Bank Group finance projects. Several years ago, the board of the World Bank Group made the decision that they wanted to add a rehabilitative aspect to the sanctions system. And so the default sanction was changed to this debarment with conditional release. In most cases, the conditions for release for companies, and we also do sanction individuals, but I'll speak only about companies. In most cases, the conditions for release will require the companies to develop and implement an integrity compliance program that is consistent with the World Bank Group integrity compliance guideline principles, which I will introduce in a few minutes. There's also the conditional undebarment, which Magda mentioned. Again, in those cases, the companies remain eligible as long as they continue to meet certain conditions for release. Now, I am going to jump ahead a slide without moving the slides, but if a company at the end of the initial period of debarment with conditional release does not meet the conditions, that company's debarment with conditional release will be continued until the conditions are met. Similarly, for a company that has been conditionally non-debarred, if that company does not meet its conditions for release at the end of that period of conditional non-debarment, there will be a conversion of the conditional non-debarment automatically to debarment with conditional release, at which point the company will become ineligible. So there is a tremendous incentive for the companies to work with the Integrity Compliance Office, where I sit, to really try to meet those conditions in a timely manner. So now integrity compliance programs. In the World Bank Group context, we look at integrity compliance programs as a means of rehabilitating a company after a sanctionable practice has occurred. I don't want the takeaway from this intervention to be wait to put in place a compliance program until something goes wrong so that you can get released from World Bank Group debarment. I believe it is very important for companies to consider putting in place an integrity compliance program before anything happens, simply as a standard means of doing business. Just as companies focus on health and safety, I think they should focus on integrity compliance. Magda talked about mitigating factors. If a company already has a compliance program in place, when they find themselves under an investigation, and maybe something went wrong. A program is only as good as its people. Even under the best program, things can happen. But if a company can demonstrate to the Integrity Vice Presidency that we had a program, it was violated, but we've taken steps to address what happened. That is something that can get under the sanctioning guidelines, the World Bank Group sanctioning guidelines, under mitigating credit. A company can get up to a 50% mitigation. So that can really significantly change either the period of sanction, if it will be a debarment with conditional release, or potentially even could change the sanction from a debarment with conditional release to conditional non-debarment. So again, it's just a good business practice to have a compliance program in place. So now what are the primary goals of an integrity compliance program? 4 things. First, an integrity compliance program should seek to prevent misconduct from occurring. It should, second, have mechanisms in place to detect misconduct if it is suspected to have occurred. Third, it should have in place mechanisms to investigate misconduct if it is thought to have occurred. And finally, it should have in place mechanisms to remediate the misconduct if it is found to have occurred. And so each of the World Bank Group integrity compliance guideline principles seeks to address one or more of these core goals of an integrity compliance program. So this, just because of timing, I won't go through this because Magda and I have spoken about this. This process really just shows the process of engagement. So very quickly, if a sanction is imposed through the Office of Suspension and Debarment, the Sanctions Board, or via settlement agreement that includes conditions for release, that company automatically will come into the Integrity Compliance Office portfolio. We will engage with that company, make recommendations to enhancements to their program. They may work with a third-party monitor or compliance expert who will report to the company and to us. Ultimately, when the company applies for release, my office will make the determination, and the company either will have been found to have met the conditions for release and then be released from the sanction, or as I mentioned earlier, the debarment with conditional release will be continued, or the conditional non-debarment converted to a debarment with conditional release. So the integrity compliance guidelines. People, when you look at our principles, I don't think this is shocking to anyone. I don't think, you will look at this and say, oh my goodness, it's something I've never thought of before, because they really are consistent with international standards in this area. The OECD standards, UK Bribery Act, US Foreign Corrupt Practices Act, in France now, Loi 52. So these are really commonly understood principles. But what we do when we review a program is look to see how the particular company's compliance program meets these principles, not only on paper, but in terms of implementation. The implementation is extremely important for us, and that is something we do look at very closely. But as I mentioned, each of these principles really seeks to address one or more of the 4 goals. But to me, the starting point is what is number 3, oddly enough, in our layout of the guidelines, the risk assessment. An integrity program needs to be based on the risk profile of the company. And so it is critical that in developing or enhancing or continuing to maintain your compliance program, that you do continuously assess, well, you initially, of course, and then continue to assess your risks. And the risks may differ. For a multinational corporation that's operating in many countries or in different sectors, the risks may be different across those sectors or across the regional subsidiaries. So it's important to not only have the global overview for the corporate risk profile, but also the independent business units, sectors, as well as regional operations. So in addition to the risk assessment, it's important in developing a program, and for us in reviewing a program, to consider other factors. Because again, the program has to work for the company. It has to be capable of implementation in a particular company's context. So for example, company size. We expect, looking at reporting, the duty to report, what we expect a company to have in place is a reporting mechanism where employees and third parties can submit reports of concerns that misconduct has occurred confidentially on an anonymous basis if it's allowed under applicable law and without fear of retaliation. But what that reporting mechanism looks like will be very different if you're looking at a multinational corporation or a small, medium-sized company. So for a multinational, we would expect the multinational to have a hotline available 24/7 in multiple languages so that employees across the globe can report in on their own timeline, in their own language, and be comfortable that report will be addressed. Now, real example, we worked with a company, had been sanctioned. It had fewer than 20 employees. About half of the employees were related to each other, and all of the employees had been at the company for more than 10 years. So we had to think through with them what works in that context. You know, we talked about the reporting line where you call in. Well, it wasn't realistic for them to retain a third party to accept the reports. It was a cost factor. So then, well, do you call into the compliance officer? Well, the compliance officer was related to several of the employees. So there's no anonymity there. And so that didn't necessarily work. So with the multinationals, I didn't mention, one of the things we also look for, do they have a place to click on their website, some type of electronic reporting mechanism where you can just click on the internet or on the intranet and submit a report that will go into the compliance team. Well, this company did not have an intranet, much less an internet website. So that wasn't realistic to expect of them. So talking through with them what could work, we became comfortable that in that particular case, having a box in the lobby, which was designated for reports, actually would be sufficient. Now, again, if you have a 10,000 person company that comes and says, oh, we have a box in our office lobby, we're good to go. No, but it has to be scaled. So in that case, again, that's where the differences come in. You just need to do something that's appropriate. I also think it's important to think about culture because, as you'll see under item 4, internal policies that we look at, we'll look at the gifts and hospitality policies. I do a lot of work in Asia. And in Asia, the reality is at certain times of the year, Lunar New Year, spring festivals, fall festivals, gifts will be given. So rather than pretending that is not the reality of the company's operations and putting in place a program that prohibits gifts anytime, anywhere, build controls around the reality that, for example, in China, at Chinese New Year, a gift is probably going to be given. So build that into the program, but build controls around it. So rather than the traditional red envelopes full of cash, maybe say, well, that will be prohibited, but you can give a fruit basket or something else, to the office, so that you're still recognizing the cultural importance of certain holidays, but you are building controls around how you are recognizing those particular types of holidays. And similarly, have reporting and approval requirements so that you know the values, who is receiving the gifts, who is giving the gifts, and that these have been properly approved and recorded in your internal systems. So those are just a couple of examples of where tailoring the program to the company's own circumstances and profile are very important factors in developing the program. And I'll also note there in terms of training, I think it's very important also to consider how the training is being done, because you want the training to resonate with your employees. And not every approach works in every context. So I do think it's very important to understand what will resonate, how you best communicate and train your employees. It may differ across regions. It may differ across sectors. It depends on the type of company where you are. And so just adapt the policies and procedures and communications training strategies to what will work in your particular environment. So we talked about the design and development of a program. And this is, these are things that we look to. How is the company taking the program forward once it's been put in place? Is it maturing? If things have happened, if there has been some misconduct detected, are they taking those lessons learned to really incorporate it into either a revision to a particular policy that perhaps wasn't tight enough that allowed the misconduct to kind of fall through the cracks, or is it being incorporated in your training? To me, there is no more effective way of training than using real life lessons. So I think that is important, and that is something we look to see if companies are doing. And as I mentioned earlier, adapting to the change risks. One thing that is very specific to the World Bank Group system, if there is a sanction, if we are dealing with a corporate group, Magda talked about there may be cases where a full corporate group, subsidiaries, affiliates are all sanctioned. In other cases, that may not happen. So for example, if the misconduct occurs at a subsidiary operating in a country outside of headquarters, and the parent company was not found culpable under the investigations and sanctions process, the subsidiary may be the only entity sanctioned together with its downstream affiliates. But if the corporate compliance program is operated out of headquarters at the parent level, from an integrity compliance office standpoint, we will want to engage with the parent company. Parent company will not be sanctioned, but we will expect them to engage with us for purposes of further enhancements of the integrity compliance program, because the sanctioned subsidiary simply may not be in a position to make those types of enhancements on its own. So when we look at implementation, very important for us to understand what the compliance function looks like. And again, that varies wildly across different types of companies. If you have a family-owned company, if you have a small company, if you have a multinational, how that compliance function is structured, again, needs to be adapted. But we do want to be comfortable that it is adequately resourced, it is appropriately resourced. In other words, that the people in charge have been properly trained on compliance matters, and that it is someone who can act with the authority and the autonomy within the company. I just want to talk, because I think time's running short. So in the next couple of minutes, one other example about effective implementation, how we test a program. Sometimes we do site visits, sometimes we rely on company or third-party expert reports, but statistics are important. But I think what is more important, and the example we have here is employee and business partner due diligence. It's important for us to understand how many new potential employees, new potential business partners have been run through due diligence checks, including integrity considerations. But what we really want to understand, have any potential employees or potential business partners been rejected because of integrity concerns that were identified as part of the due diligence process? So in other words, are things getting caught in the trap? In the filters that you have built in your compliance program, because that shows us that the compliance program is working. Similarly with reporting, companies tend to want to come to us after 2 or 3 years of a debarment engagement with our office and say, we have our reporting mechanism in place. Isn't this great? We've had no reports. Well, not necessarily. I actually prefer the companies that are coming and saying, hey, you know what? We've had these reports. Often they relate to human resources and not compliance. But, we've had these reports because that shows us a couple of things. One, employees are aware of the systems that the company has in place. 2, employees are confident that if they submit a report, the company is going to do something about it. Because if they didn't have that confidence, they probably would not be using the system. And third, it gives us an opportunity to see how the company is reacting. Again, the investigative and remedial measure mechanism or goals of a compliance program that I mentioned up front. And finally, I just want to mention when we work with companies, we may work with, as I said, monitors or experts, but we also have started a mentorship program whereby we ask companies that have been sanctioned and by the World Bank Group, have met their conditions for release and been released from sanction, to mentor small, medium-sized companies currently sanctioned and working with our office. And it has had tremendous success. We've had multinationals mentor small, medium-sized companies, and we've had peer-to-peer small, medium companies mentoring small, medium companies. And I find that to be an excellent model because they understand each other. And they have similar business models often. Often they have a common language, operate in a common country or region. And so this mentorship program is something that I think is very important for companies to keep in mind. If they do find themselves working with our office, we really would be happy to help the companies try to find an appropriate mentor with whom to work. And impacts, we've had very positive feedback of companies that have put in place compliance program, increased business opportunities, attractiveness as a business model, even internal efficiencies, finding that having put in place these programs, they now have structures around and processes around things that perhaps before had been done, not incorrectly, but just not on a consistent basis. And also collective action, where these companies, similar to the mentorship program, are really working together with other companies to try to promote integrity compliance principles within their business sectors. So thank you very much.
Thank you so much, Lisa. And I also asked Magda to come here, and we have to try to squeeze together here in front of the screen so that our viewers can see us. So just to make clear again, and I think we heard that you're looking at companies, NGOs, and consultants. But in the case that someone sees something, let me call it fishy, going on with an official, they would also contact Integrity Vice Presidency at the World Bank. That would be
absolutely. If it is related to World Bank finance projects, this is information that we're interested in. And as I mentioned before we started, sometimes reaching out to us might save headaches later. The earlier we hear about any problems, the better. When we hear directly from companies, they're in a much better situation, even if something happened, to mitigate the situation and to come out of it in a with a much better outcome.
Very practically, you already mentioned the earlier the better. So when and how do you get in contact with you?
We want to hear about issues in our projects as early as possible, and to the extent that we can prevent misconduct in our projects, that would be our biggest success. We're not looking to sanction entities. We're just looking to safeguard World Bank finance funds and to make sure that the projects reach their developmental objectives and that funds are used in the way they should be used for their intended purpose. So as early as you hear or you realize that something might be going on, we'll gladly take the information and work with you.
How long does it take?
So for investigations, we have different.
Yes,
for investigations, it depends on the nature of the investigation. If it's very complex, it may take up to a year and a half, and then the ensuing sanctions process might be longer, or the settlement might be longer. But then integrity, I'll at least explain.
Well, and the integrity compliance program is linked to the period of the sanction, and again, assuming that the conditions are met at the end of that initial period of sanction. That's when the engagement with our office would end.
Okay. And what do you tell companies? Because I think that some companies and consultants would not want to come forward for different reasons. They don't want to be on a blacklist. They don't want they're in a tender process, or they're in an contract implementation, and they think that might harm their chances. Does it? Or what are the incentives to come forward anyways?
So the main incentive to come forward is to mitigate anything that may have happened. The earlier we hear about, if it's in a collaborative way, if we can work with you, you'll certainly come out in better shape. That doesn't mean if something happened that there will be no consequence whatsoever, but it will certainly be mitigated and will be lighter. And if you actually learn about something before misconduct can actually happen, then that would be even better, because we would try to prevent it, and to the extent possible, we would also work with our colleagues in operations if their intervention is required.
Okay. I have a question here asking about the OECD anti-corruption regulations that were signed and implemented in the 1990s. And the specific person company has heard about it during an investigation phase with the Lesotho Highlands water projects. Do you know, can you refer, do you have any more? And again, if we cannot answer a question here, we will definitely get back to you. Maybe we need to check up and find out more more information. So I don't know, would you be able to?
I'm not completely sure what the question is about.
There are various OECD conventions and anti-bribery related, anti-corruption related documents. So, some are, but I'm trying to think, for example, there's one now that's 10 years old, and it's undergoing a review actually by the working group on bribery. But that is really, those guidelines they're guidelines for governments. So the World Bank Group does not follow those specifically, but at least in terms of the integrity compliance space, the principles advanced by the OECD anti-bribery group are certainly consistent. Our integrity compliance guideline principles are consistent with those particular principles as well.
What are the implications? And again, I think this is for you, Magda. Once you start an investigation, do you stop a project, or what can happen?
That's a very good question. Projects need to go on. They have very important developmental objectives. We try to conduct our investigation in parallel with our operational colleagues working on the projects. There might be implications on specific contracts, but they only happen once the investigation has been completed. If the World Bank, and this is not a decision from our vice presidency, this is from our colleagues in operations and procurement, if they decide to exercise any of the remedies in the loan agreements, and those are exercised vis-a-vis the borrowing country. So there might be implications to the financing once an investigation is concluded, but there should not be an implication on the specific contract between a contractor and a borrowing country.
Mm-hmm. Okay, thank you. And a question for you, Lisa, do you think that in the future going forward that during the procurement process, or when you hand in your bids during the tender process, that the existence of a compliance program will already have to be mandatory to show that you have that? Is that something the World Bank is working on, or other institutions are working on? That's a criteria?
Yeah, no, it's a question we get very frequently, and it is something that has been the subject of discussion within the World Bank Group and with procurement, the keepers of the procurement framework in particular. I don't anticipate that happening anytime soon, if ever, and for a couple of reasons. The World Bank Group has very limited restrictions on eligibility for bidders under World Bank finance projects. It has to do if they're sanctioned by the World Bank Group, if there are certain UN sanctions, et cetera. So they're very limited because the bank really wants to attract the broadest possible number of companies as potential participants under bank finance projects. And so, imposing an integrity compliance program obligation would be another, I would say, restriction, arguably, on the eligibility of potential bidders, and quite frankly, could eliminate some of the small, medium-sized companies or companies operating in countries where integrity compliance programs aren't that common yet. So I think that is one of the concerns that has been voiced internally. And there also is the other question of how would that be implemented? Because the World Bank Group, we do not, we as Magda mentioned, it's a government procurement implementation unit that is actually implementing the procurement, doing the bidding processes, et cetera. So, it's one thing to have a company just, certify in their bidding documents, yes, I have a compliance program, but what does that mean? So then, they could have, we've seen, this is a true story. We've seen companies come to us trying to get released from sanction who've downloaded another company's program off the internet. And we know this because they somehow missed they did a global replace of the company name and somehow missed it in a couple of places. And the company whose program they borrowed was still in there. So, so is it a real program? So we wouldn't want it to be just a tick box exercise without any substance behind it or any understanding if the program is legitimate or is actually being implemented. And that's something then, how would PIUs, procurement implementation units, actually be able to kind of check that? So practically, there are some challenges as well as to how that could be implemented.
There was a specific question to one of the slides, the framework for external investigations, and I'm not doing. Okay, so you remember? That's the complex one about if it means that the investigations that the World Bank only loans to clients who are owned, operated by governments and ministries, or more general question.
The World Bank actually lends to other governments, sometimes subnational governments. Doesn't need to be a national government, could be a municipal government in some cases, could be a provincial government. And the World Bank also has, let's say, a private sector arm through the International Finance Corporation that lends to companies. Our sanctional practices do apply to them, and so does the anti-corruption framework. The way in which investigations and potential and sanctions apply would be similar. It's just that the way in which the International Finance Corporation works with companies is very different from the way in which the World Bank works with governments. So there might be some differences there, but initially, yes, if it's a World Bank loan, it's to a government, either subnational or central government.
Mm-hmm. And then two questions relating to working in the field, subcontractors. How do you, first question, how do you really know? I mean, you're relying on local recommendations. How do you really do that investigation work that you choose, like someone who is, so it might not, you might have the compliance program. What about your subcontractors? Yeah. And I'm adding on the second question. Right away, how do you deal when you're invited, like on a trip or something, like on the spot? Yeah. How do you react? What do you do?
Okay, so with respect to business partners, that's where the due diligence process becomes so important. So do the searches you can, and this varies by country. Can you do a background check on if you're looking at an individual, or what publicly available information is there? There are a lot of third-party vendors that run these types of searches. If that's something that a company can afford to undertake, they could hire a third-party vendor to run a search on someone, or at a minimum, do your own search, publicly available information. Ask the company if they have a compliance program, if they do take a look at it. Have the company at least certify that they will comply with your integrity compliance program, so that you have something in writing where they're signing up to abide by those principles. Build into your contract a clause whereby the company agrees to abide by your compliance program and accepts that you can terminate the contract if they violated the integrity compliance program principles. Now, that's not foolproof. You still might find out, hey, they've signed all these certifications. We gave them compliance training. They have this contract clause, but they still do something wrong. I mean, that, again, as I said, program's only as good as the people. Same with business partners. But at least if you've taken those steps, if you do find yourself under an investigation, you will have something to say. Yes, we understand this happened, but we took all of these careful steps to try to avoid this from happening in the first place. And then with respect to the expensive trip invite, if you have a compliance program in place, this sounds really simple, but we've heard companies that have used this to their advantage. Sometimes just saying, gosh, I would love to be able to accept your invitation, but we have these company rules that won't allow me to do it. Then it's off of you. It's not you saying, no, I don't want to go. It's you saying, I cannot go because it would put me in violation of my company rules and my employment contract. So I'm sorry, I just simply cannot do it. So it gives you something to rely on to try to turn down those types of situations.
Can I also just interject? Yeah. If you do have a problem with your business partner and you do learn about it, that would be the right time to share with us.
Yes.
That would certainly save headaches down afterwards. Just alert us about it. That would be perhaps something where you can take action to protect the company.
Yeah. And one last question. How often do investigations you lead actually lead to sanctions or have to be canceled? Can you just very quickly give us a percentage? Or
well, we don't have sufficient resources to investigate all of what we hear about. We're very selective in what we investigate. That means that we also have a high rate of substantiation in our investigations. We first have a complaint assessment process through which we really look into what we receive, and we tend to convert into investigations and assign resources to matters that seem to be serious and where there are investigative leads that we can follow. So I'd say we only take a few number of investigations from all of the complaints that we receive or the different pieces of information that we receive. When we do conduct an investigation, there's a high rate of substantiation. I think it's around 60%, but please don't quote me on that. I may have it wrong.
Well, this brings us to the end. Thank you so much, Lisa and Magda, for being here. If you have any additional questions, please obviously come forward, write them to our email address. We'll be happy to answer them. Herzlichen Dank fürs Zuschauen und auf Wiedersehen aus Washington.